Hello traders and welcome to another video review. Today is Wednesday, November 10th, 2021. Let's start today's analysis with the look at the Forex calendar. What do we have here today? Well, the most interesting data released overnight were from China in form of the CPI indicator. Consumer price index has increased significantly. Last month it was a reading of 0.7%. This month 1.5%. That's over 100% increase. Market participants expected 1.4%. Producer price index is increasing as well in China. 10.7% was last month. This month is 13.5, which again beats the expectations of 12.2. That's the most important data overnight. We got the CPI data as well from Germany this time, as you can see, in line with the expectations, 0.5% on a monthly basis and 4.5% on yearly basis. Not too much data during the London session today from the various indicators apparently, but during the New York session we have, of course, consumer price index from the US. As you can see, it's a kind of an important event. It has four dots, green dots, and the market participants expect an increase from 0.4% month ago to 0.6%. Maybe this data will not be, these expectations will be not enough for the data, because data might always beat the expectations. And if the CPI index is rising across the world, in China and in the Eurozone and Germany, then this indicator might increase in the US as well. Moreover, we have unemployment claims, continuing claims data from the US scheduled for release 3:30 as well, together with the wholesale inventories. And for all of you crude oil traders, we have crude oil inventories scheduled for release 5:30. That's about it for today. If you want to know what are the key events for today from the perspective of the Forex calendar, of course, and data release, I guess that we should possibly prepare for the consumer price index data release. So let's take a look, of course, at the euro dollar. The euro dollar, as you can see, is still heading lower. It's inside of this descending channel, just probing the level of 1.15. The last time we went deep towards this level to the lows of 1.1513 was in the 5th of the November. Since then, volatility kind of decreased, because this is just a slight bounce towards the highs of 1.1609, so that's not even 100 pips. And as you can see today, again we are starting with the continuation of the downtrend on the euro dollar. However, this is a daily time frame chart, so there's a plenty of time for this candle to close, of course. The nearest technical support, I guess we will stick with 1.1525 and the lows of 5th November 1.1513, but nevertheless the aim, the target is 1.1501 and 50% of the Fibonacci retracement of the whole post-COVID rally, located at the level of 1.1497. Of course, if we break below this level, then the next Fibonacci level is way below, over 300, almost 300 pips below, at 1.1295. There is a technical support at 1.1422 on the way as well. As you can see, momentum is still negative and the market is under control of bears, so be prepared for the increased bearish pressure if the data will not satisfy the market participants. So that's the euro dollar. What is going on with the US dollar to the Japanese yen? This pair is susceptible for the data from the CPI measurement as well. We have retraced 50% of the last wave up. This wave is from the beginning of the wave 1, so from here to the top of the wave 3, 50%. 112.76 had been the last seen the price. Yes, there you go. This is exactly 112.74. So that's 2 pips lower. That was the low, but we can still move this wave 4 here. Not what I wanted to do. This is what we can do with the wave 4. So 38% is already violated. We have a 50 and 61%. Please remember that any violation of the highs of the wave 1, which is at the level of 112.6, would invalidate this whole scenario, of course, and the market would likely be continuing this downward trend. However, we have a typical ABC to the downside done in form of the irregular flat correction. So maybe today we might start a bounce higher, mostly because the wave 4 has hit the level of 50%. We have 3 wave down move, and of course the momentum broke below the level of 50, which is the neutral level, and is right now at the level of 49.57. So that's almost neutral level, but it might be pointing to the upside, right? So please keep an eye on the US dollar to Japanese yen. Plenty of new possibilities here. Please watch the invalidation level, and of course any big green candle to the upside like this one, for example, would mean that maybe the wave 5, because this wave is missing here on this Elliott wave count, the wave 5 will be there you go, will be of course in progress. So targets for the wave 5 eventually 116.11 and 116.58. That's the first so-called Fibonacci target cluster. Next pair will be US dollar and Canadian dollar. We didn't look at this one quite much. And as we can see, after the wave C had been completed, at the level of 1.2287, we have a side move here and then a bounce higher. However, the key short-term technical resistance, let me just move it a little bit higher, because there you go, at 1.2493 has not been violated yet. Moreover, we have some sort of the pin bars here, we have a down candle here, and we have definitely some sort of the pin bar here, but it's not a shooting star because it's not at the end of the up move, right? It's a third bar in a row here, so it's a kind of an important candlestick pattern as well, because it's a pin bar, so we have a long upper shadow, and today we have a confirmation that the market is under the influence of bears, and we might expect another move to the downside, possibly well, of course, towards the key short-term support 1.2301, but on the way there is some weak levels like 1.2399 or of course the previous Fibonacci retracement and projection levels. However, those levels had been hit already, so maybe instead of the ABC correction to the downside, the market is right now developing more complex correction in time and price. We will see in the near future, of course. And let's take a look at the last but not least market. Of course, we will end up with, this time we will end up with the Ethereum, all right, because Ethereum made its new all-time high again. So our scenario of Elliott wave is getting extended, which has a good sides and which has a bad sides. The good side is that we can still expect the market to move higher. However, we are not quite sure what is going on here and what is the actual moment in the trend, in a cycle eventually, right? So it looks like even if we label our chart like this, it's still not that successful, because it looks like we have still plenty of space to cover. The next target for the wave 5 is located at the level of 5,000. It's a round, of course, number, which is kind of important here, and we will put it in a black because it's never been reached. So wave 5 might be targeting the level of 5,000, and it looks like if we mention 5 waves to the upside, it's the better adjustment of this current move to the upside here in impulsive style is something like this. So we will definitely are at the end of this rally. We are somewhere at the end of this impulsive increase towards $5,000. Market is of course extremely overbought, but please remember we are trending, so the market can stay in the overbought levels for some time before the correction will happen. But the correction on the Ethereum market is coming. The question is whether this will be the last push to the 5,000 and the sharp correction, or maybe it will be like a more complex and time-consuming consolidation between 5,000 and 404,470 basically. So please keep an eye on the Ethereum. It's still in the nice uptrend. It's still under the control of the bulls. However, the last cycle up is exhausted and it's overextended. So we might see some sort of a correction on the Ethereum in the nearest future. So that's everything for me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. Bye bye.